Ever wondered how the financial services industry works? How it connects those with money to those in need of it? If so, you're in the right place. Picture the financial services industry as a bustling marketplace. On one side, there are the savers. These are the individuals, households, companies, and even governments that have money to invest. On the other side, there are the spenders, those who need money, like individuals funding their education, companies investing in infrastructure, or governments filling gaps in their budgets. The financial services industry sits right in the middle of this marketplace, offering products and services that channel funds from savers to spenders. It's a vital cog in the financial system, making sure money flows smoothly from those who have it to those who need it. Output. Now, these savers and spenders have different names depending on their actions. Savers, when they invest, become investors or providers of capital. If they lend money, they transform into lenders. Spenders, on the other hand, become users of capital, and if they take out a loan, they're called borrowers. This brings us to the question, where do these savers invest their money? The answer is assets. Assets are valuable items that come in two main forms, real and financial. Real assets are physical items like land, buildings, machinery, cattle, even gold. They are often referred to as physical capital. Financial assets, however, are claims on real assets or possibly other financial assets. An example of a financial asset is a share of stock, which represents ownership in a company. The owner of this share, known as a shareholder, has a claim to a portion of the company's assets and earnings. An investor's total holdings of financial assets is called a portfolio, and financial assets that can be traded are called securities. Securities come in two main types, debt and equity. Debt securities are loans that lenders make to borrowers. They're also known as fixed income securities or bonds. Equity securities, or stocks, represent ownership in a company. Shareholders expect to earn a return by selling their shares at a higher price than they bought them, and possibly by receiving dividends. So to summarize, the financial services industry is a marketplace that connects savers and spenders. Savers become investors or lenders, while spenders turn into users of capital or borrowers. These parties deal in assets, specifically real and financial assets, which come in the form of securities. These securities can be debt, like bonds, or equity, like stocks. Understanding these basic principles is the cornerstone to understanding the financial services industry. And with that, we've just scratched the surface of this vast and complex world. So stay tuned for more intriguing insights into the realm of finance.